Hello everyone. I'd like to start our mid-year 2011 update with a discussion on gold prices and the implications for gold shares as we move forward. I think we've seen some good movement up in the gold price. We don't think that's over. I think underlying there is still a move to continue to debase currencies. The real fundamental issues around sovereign debt have not been solved. I think you'll see further investment demand in gold. I think there's an inability out there from the mining companies to supply more gold and mine more gold. I think that's going to drive gold prices as we move through the balance of 2011 and into 2012. Gold equities have lagged. I think that will be corrected as we move through the second half of 2011 at $1,600 gold. The gold industry is certainly generating significantly more in terms of cash flow and earnings. I think that'll be translated into larger payouts to shareholders in the form of dividends. So these are really good businesses, and I think that's going to be reflected in the shares as we move forward. I do not see these shares continuing to trade at the low end of the historical valuation ranges. How does that place Agnico? Agnico is going to see significant increase in production as we move into the second half of 2011. We're anticipating a 20% increase in our gold output. We're going to see a significant drop in our unit cost to produce an ounce of gold. Combine that with higher realized gold prices in the second half, we will see a significant improvement in our margins. Although we still have cost reduction work to do at Kittilä and at Meadowbank, we should still see that translated lower costs, higher gold price, more production. That's going to drive earnings and cash flow. What will we do with that additional cash flow? Well, we've got reinvestment opportunities at some of our existing mines. We're going to continue to grow output over the next several years. We expect that output to grow to at least 1.5 million ounces. We're going to continue to use our cash to make strategic investments in the gold space that will provide future opportunities to build output as we move beyond 2015. And we're also going to focus on dividends. As a company, we've paid one for 29 straight years. We've got one of the best track records on dividend paying in the gold industry, and we're in a position now that we've got 6 mines up and running to increase that dividend as we move forward. So there's more work to do, but we're certainly in a strong position given where we are in the assets to not only grow output but also to grow reserves. We've had some really good exploration results. We've got wide open deposits. We're going to increase our exploration spend, and that's not only going to grow our reserves, but it's also going to allow us to translate those larger reserves into production growth opportunities. So that's it for now. I look forward to updating you on our activities as we move through the balance of the summer and we conclude our third quarter. Thanks again.